What's up, guys? How you doing? Hope you're all doing well. So just a quick one here on nasdaq. It's Tuesday today. It's the 20th. So we were going over the 19th to the 20th. So now what has happened is so on the 15-minute, what has happened is price did exactly how we said in the last video to go liquidate the low, sweeping the low, and then at New York session it opened and it then ran the high. So right now, since that has happened, right, and then price is now pushing back down into the range. So on my 4-hour time frame, I'm monitoring the fair value gap just underneath the one that we traded yesterday. So now I'm monitoring this fair value gap, right, because this fair value gap needs to get filled in or could get filled in. So that's what we'll be looking at for this fair value gap to be tapped into price, and we could potentially look to then ride it back high, filling in this daily fair value gap. So this is a daily fair value gap at this level, right? So we'll be looking to test in this level. So on the 15-minute, how I'm looking at it is, so it's about to be New York's open. It's almost 9:30. It's 8:45. It's 8:45 right now. It's about to be 9:30. New York open. So what I'm looking at is that this is my low that ran this high. So this is my trading range again. So now it's evolved from this trading range that we were looking at to this trading range. And in my trading range, I'm looking for the liquidity points. So this area over here is a 4-hour fair value gap, which we're in right now, right? And this is our 15-minute fair value gap that we left at New York's opening over there. So these are liquidity points. A fair value gap is liquidity, right? Because there's not much of structure besides this structure that price pushed in, pushed down. So on a lower time frame, you see the relative equal lows at this point. So this is a liquidity zone, right? So we could get price pushing into this level over here like this, right? Sweeping off this liquidity over here and then wanting to push up because we're still in a 4-hour fair value gap over here. So we're going to monitor it and see how New York open plays. But overall, what I'm looking at is stop losses at this area in price and in this area of price. So these are orders in this market, right? So most likely I want to see price coming down to this level over here, sweeping these stop losses out, and we're gonna tackle this 4-hour fair value gap over here. So I want to see some sort of confirmation up in here, and then we could look to then ride it up, finishing off this daily fair value gap, targeting our next daily fair value gap. So that's basically what I'm looking at. It's just a quick one to show you guys what I'm looking at. I'm looking for the liquidity run, the stop run over here, and then I'll look to get in, because if we want to get in between this range, there's not much liquidity in this range besides for this level over here. This is on the 15-minute time frame, remember. So there's not much liquidity at this level besides for this liquidity that we're in right now, you see. So most likely I will want to see price taking this level over here, and that's when I want to be getting into my long positions. And this one would be one of those swing positions that we hold to target the end of the daily fair value gap, targeting the next daily fair value gap. So if we go to the daily, we can see it again. You see, so we want to fill in this daily fair value gap over here. We want to fill in that and then possibly target this fair value gap and see how price reacts into this area. So I'm just looking for them to liquidate yesterday's low, Monday's low, testing this area over here. It's also a daily fair value gap. You can see it on the 4-hour. So I'm looking for them to come into this 4-hour fair value gap, right? And then from that 4-hour fair value gap, we look to go up from there. So there's still this level over here, which was supply flip to demand. So want to monitor this level in price, see how price reacts to these levels, and then look to then take this thing long and possibly holding a swing trade for the week. So we want to get in somewhere over there with a stop below that low over here, and we want to ride this high first out, but then full target will be up here. So that's a 3%. But remember, at that time I'm not going to get in randomly at this level. I'm going to wait for some sort of confirmation, a shift in structure, because the risk right now is a bit too big. That risk, 176 pips, that's a bit too much. You see, it's bringing my risk to reward to a 3, almost a 4% risk to reward, which is a good trade to take, but I could make that risk to reward a bit better if I wait for confirmation. So basically look for that liquidity grab, then price is gonna play around creating structures in here. As soon as we get a structure shift, we'll enter off a fair value or the demand that's gonna hold this price, and that's where you wanna ride it. So then at that point when I enter, after getting that shift in structure, my entry would be around there, with stops just being around that low that caused that shift in structure. You see, so now we're risking only 50 pips almost for 14, almost a 15% trade with a 700 pip target. So that's what I'm looking at for Tuesday. It's the 20th, Tuesday, the 20th of May 2025. That's what we're looking at. We're looking at targeting this fair value gap on the 4-hour time frame, sweeping this liquidity, and from there we ride price back up. Yes, so that's it for this one. It's just a quick example on what I'm looking at and what I see happening in this markets. See you guys in the next one.